Firstly, Anthony, alas, Northern Rock had branches. It did go bust. So much and all as I'd like to say that, or like to agree with you that having branches is somehow or the other going to guarantee stability, I really don't believe it will. And I really don't believe that we're in any position to stop the march of technology. And that's an issue for First Direct as it is for branch banks, let me assure you. When thinking about what I could share with you, people in this room who know immensely more about me, or rather than me, about loyalty or customer centricity or a whole bunch of stuff, you know, you scratch your head and you think, heavens, probably if I knew the answer to these things, I wouldn't share it with you. Yeah, I'd be keeping it to myself and trying to build a business off the back of it. So it's in that context that I will at least share what started off as a speech, but I've now kind of distilled down to 21 thoughts or 21 ideas. There's no significance whatsoever to the 21. It could have been 19. It just turns out that it was 21. And before I do that, when you look at First Direct, we're 23 years old. We're very, very different from other banks in so many very different ways, and we consistently come out strongly in all sorts of polls when it comes to measuring loyalty and satisfaction and centricity. And you might look and think, well, you've got an unfair advantage. I feel for Charlotte because I actually believe it is a journey. It is about whether people want to do these things, and it is going to take time, and it is going to take time to reset opinions that are long established and very firmly rooted. But that doesn't make it, if you like, a journey without a positive destination. We do have unfair advantages. I make no apologies for it. We started in a position. The miracle is that we're still in that position. So people kind of take that for granted, as though it was preordained that we would start in a place and still, 23 years later, be at the top of our industry in a particular regard. And I can tell you, because I've worked in First Direct on and off a bit, and been close to the brand for a lot of years, that was by no means given. And it is not by any means given today either that we will continue to perpetuate that story for the next decade. That requires a huge and persistent and consistent fight. Because to be as different and unique in our industry as First Direct is not something that you can take for granted or assume will happen as a natural outcome. If that were the case, well, First Direct simply wouldn't exist. At a very glib level, here's the truth. Yeah, the truth is that we pay our people who answer the phones more than any other bank in the UK pays their people to answer phones. It's a fact. It costs us roughly twice as much as any other bank to answer a phone call at First Direct. Yeah. We do not have an IVR. We do not put technology in front of our calls, and that's one of the things that drives the cost of call handling at First Direct. We answer our calls on average in around 6 seconds. That's the year-to-date performance of First Direct's call center. 6 seconds ASA. And we have an industry-leading AHT. Yeah, so it's not like you then spend an awful lot of time on the phone, shooting the breeze and chatting. You don't. We do our job, we do it really effectively and efficiently, and you get off the phone pretty quickly. So there's a lot of mystery and hocus pocus about, what you need to do different, what we can do different culturally, and all sorts of stuff that's quite difficult to pin down. But there are some hard economic decisions that you need to make if you want to be a First Direct, at least in respect of telephone. And there are costs associated with those, and those are unpalatable costs in the current economic climate. We have a reward system for our people that is archaic. We do not have a performance-managed pay system in First Direct. We have an egalitarian pay system at First Direct. But a strange and wonderful thing happens as a consequence of that. You don't get a whole bunch of bitching and raving about who got paid what at the end of the year. Yeah? And so we haven't created this internecine feuding in our own people about who gets rewards. Everyone gets rewards at First Direct on the basis of their contribution to the overall performance of the business. So there are so many things that are specific and unique and unpalatable to commercial banking decision makers about FD that to some extent I can sit back and think, well, in 5 years' time, as long as we don't do anything stupid, the banking industry will really not have caught us up because the impediments to the decisions are real and material, and I can put a price on them. And I have yet to meet very many people in my industry who have any appetite to go there. And that means that there's a gap between what you would like to achieve sometimes, what you wish for, and what is actually going to happen. Of course, the irony at FD is that by far, the smallest number of contacts that we manage with our customer base is on the phone. Yeah, but it is the beacon for our brand. It is the beacon for our business, and that's why we're immensely protective about it. In the same way that Anthony's immensely passionate about branches, I'm immensely passionate about the phone. And I have the same determination to protect the distinctiveness and uniqueness of FD on the phone that I'm pretty sure he does when it comes to branches. It's the lighthouse for our brand. So, what can I tell you? What are the 21 things that I thought about that I've tried to distill into some sense? The sister conference of this event, I think I spoke at earlier on in the year. And at that conference, I talked about thievery. And I wrote it now as, generally speaking, the customer is neither a liar nor a thief. Don't design your processes in the assumption that they are. This is where I left off. And there's a lot of talk about building and rebuilding trust in the banking sector. Look at your processes in your banks and ask yourself how many steps in your processes are designed in the presumption that the customer might be fraudulent or thieving. And then re-examine trust. Because we're asking customers to trust us, but we're not necessarily redesigning our processes to trust them. Don't then be shocked and disappointed when you don't get what you want. Second point, when it comes to decisions that affect loyalty, you often find yourself in a position where you can have less of a good thing or none at all. Choose carefully. The customer is in control. Today, I am dealing with a high-value customer who's been banking with us for 16 years, who had the temerity to go and get himself a high-powered job in the Eurozone, which was thoughtless of him as far as I'm concerned, which now means that his salary is paid to us in euros, and he doesn't like the exchange rate that we gave him the first time we credited it to his account. And so he called me and he wrote to me, and I've been in a bit of a chat, an exchange with this guy for the last 10 days. And we're implementing a process for that customer which is essentially destroying our margin on his business, our FX margin on his business. He will be the only customer in First Direct that this policy decision applies to. The only customer. If there are other of you in the audience who are First Direct customers, I am not doing it again. I am, in fairness. This creates an operational risk for my FX team. It's an auditable point. It's a problem for my shareholder to be doing this. But I have a choice to make. This customer is not likely to move their account often. High-value customers are like hen's teeth. Once you've got one, you really don't want to let one go. So I get to make a choice as the CEO of the bank. I can have none of his relationship on principle, or I can have a little less. How many times as leaders of your business do you ever get close enough to a customer to know what that feels like? And how well are your systems designed to accommodate that nuance in your decision making? That's why customers feel their numbers. Not simply because actually the primary way we ask them to identify themselves to us is via numbers, but ultimately because they feel they get lost in the system. Loyalty and relationship length ought not be confused. Too often lately I'm hearing people say that the fact that you've banked with us for 15 years doesn't mean that you're worth having. If you go and ask a customer what loyalty in banking means, they're likely to refer to time, in my experience. They equate time with bank with loyalty, even though the maths don't necessarily bear that out. But here's a thought. Do a portfolio analysis of your account base, and you'll find a strange correlation. I almost guarantee that you will find a positive correlation between time with bank on a segment and portfolio level and profitability. So although on a one-to-one basis it may not be true, on a portfolio basis it actually is. That the longer you keep a customer with your institution, pretty much the more money you're going to make out of them. So don't punish them for it. Don't change the rules halfway through the relationship. Loyalty demands reciprocity. Loyalty to banks is not like loyalty to friends or family. It is not unconditional. Be realistic. We find ourselves as an industry having to say no to customers, and that ain't going to change anytime soon because we're in the business of risk. So it's never, ever going to be loyal in banking as it is in other industries or as it is in other relationships. Be fair to your customers and let them know that at the outset. It'll stop a car crash in the end. Customer centricity and traditional organizational design are in conflict, and I really, really mean this. Positions near the apex of organizational hierarchies tend towards insulation from customer contact. The more you get promoted, the less likely it is you're ever going to have to speak to one of those customers. Is that true? You think it applies to CEOs? It doesn't. It applies to team leaders, team managers. It applies to every layer in the hierarchy. Turns out that First Direct, this absolutely magical little brand with this extraordinary customer service experience, is underpinned by a whole bunch of kids. The people who talk to our customers most are the newest people in our business and the youngest people in our business and the least experienced people in our business. And I bet if you look in the mirror in your businesses, you'll find something similar. They're the ones who are creating customer centricity and loyalty in your organization. Pick up the phone. I dare you. Talk to customers each and every week. It's cathartic. It's terrifying. But ultimately, it keeps you honest. And it actually keeps you in touch with what's happening outside the window and not just in your own bank. Loyalty and customer centricity does actually work. Apart from customer value, about 30% of First Direct's customers historically have joined through recommendation. It's a massive, massive economic driver of our business. But here's the thing. Half of the people who work in First Direct joined us through recommendation. I've got a whole bunch of marketers taking credit for customers they didn't get near. And I've got a whole bunch of HR generalists patting themselves on the back for people they didn't recruit. If you get it right, you create a self-perpetuating business. It actually does work. It requires, however, that you treat your people as your customers. You give them the same respect, dedication, determination, dare I say love, that you are willing to lavish on your customers. If you don't do that in our industry, I fail to understand how you believe you are going to translate your brand into an experience worth having or an experience that's differentiated. Don't ever lie to a customer. Chances are they are more intelligent than you. Bells, bobs, and whistles are all very well, but they won't excuse basic failures. The power of familiarity and predictability should not be underestimated. At conferences like this, we like to talk about the next new thing, the innovation that we can bolt onto the model that we have, but we haven't fixed the model that we have. Dissatisfaction drives defection, and dissatisfaction tends not to be about the new thing we did. It tends to be about the failure that we never fixed in the first place. The little things, when you add them together, that ultimately, if you like, unseat the customer relationship. If in doubt, blame yourself. It will save time and anxiety, because like as not in the end, somebody else will anyway. Be humble. You're a banker. You have every reason to be. Banker's purgatory is a tunnel. There is a light at the end, but for now it's probably a train. This is going to last as long as it's going to last. There's no point in pretending that there's any happy ending for us in the next 3 to 5 years. Our industry, and I include First Direct, has a lot of medicine to take. We're not separate from the banking industry in FD. Customers are not interested in banking. They're interested in money. Don't get the two confused. How many times I have read a communication to a customer that goes into immense levels of detail about the system and the process that we use to get something wrong for them. They are not remotely interested in what we do in our organization. They are interested in making the most out of their money. They're not interested in banking. Frankly, most bankers are not interested in banking. Loyalty and bribery are not different ways of saying the same thing. Money cannot actually buy you love. And if you don't believe me, try it. Up the ante on an incentive and see what happens. Because we're doing that at the moment on Money Supermarket. I'm not a hypocrite. I know what we're doing in First Direct when it comes to recruiting customers. But I also know that we need to be very careful about what sort of customers we're buying. Because we're a switchers brand, guys. We actually have a very, very, if you like, high service threshold to deliver. Because once a switcher, always a switcher. The propensity to switch subsequently is higher. That means that our standards have to be higher in order to have a business model at all. Ask yourself, in whose interest is loyalty? Sometimes customer centricity demands the exact opposite. Are you brave enough to tell your customers to go and buy something somewhere else? How many times have you told your people or operationalized that message? Because I have. Not often, I'll grant you, but there's absolutely no point in selling what you can to a customer if you know in the end you're going to be exposed. Expose yourself would be my advice. Customer centricity starts with your people. At First Direct, we do not have staff. Trust me, that's more than words. Remember, nobody ever won an argument with a customer. I don't know where I read it, probably 20 years ago, and I've never forgotten it. You may well think you've gotten one over on them, but that's a fallacy. There is no room for a lack of sentiment in my business. None whatsoever. The day that sentiment goes out of First Direct ceases to be. It is a heart and soul bank, an unusual combination. Don't reassure, inspire faith, and don't build trust, build belief. And I close. Which published in the Times about 2.5 months ago the results of a Net Promoter Score survey. You'll have seen it, or many of you will have seen it. I think the banking industry came out at +11. The most trusted members of our society were nurses, +82. Below the banks were politicians and journalists. I think 6% and 7% respectively. First Direct scored +62% in the survey. We do our own test. The latest results for First Direct in September were +57 against the banking industry average of 0.8%. It works. It works, and it's easier for me to stand here as the latest father in a success story. Because success has many fathers, and failure is a bastard. I make no pretense about being one of the fathers of First Direct. I'm in an immensely privileged position to lead the business. But I do want you to remember that it was not written that it would last 23 years, and it is not written that it will last 23 more. So it takes an immense amount of courage and fight and dogged determination to be the best at something. You do not have to run banks that are the best at customer service. But if you choose not to, for God's sake, don't beat yourself up about it. And don't pretend that you can have your cake and eat it, because you can't. It does actually cost us more to do what we do. We are not a separate legal entity from HSBC. Let me assure you, if we were, we would be the envy of any industry when it comes to profitability and growth. Thanks for your time. Have a great day.